The first rate is around 40,000. If you're under 40,000 and you're single, I think it's around 15%, and it goes up from there based on if you the way you file. So capital gains is a little more intricate in terms of just a percentage that you're making because it's all relative to how you file your taxes. But to answer your question, yes, once you sell, if it's not within that I believe it's 1 year period that you hold on to it, you have to pay those capital gains, even if you're buying a new stock. The only way to avoid that is if you're switching platforms, and of course you're just taking that stock with you. But to purchase a new stock, you have to sell that money and liquidate it to purchase a new stock. So yes, you'll be hit with those
So
capital gains.
so you will get the capital gains regardless.
Yeah.
Okay.
But what I
Uh,
say is again, look at that chart because it's something that you'll only be worried about if if you're doing big numbers. If you're doing big numbers, and then you want to make sure that it's relative to the way you file taxes overall.
Well,
But
we in
but
a new week now.
just so I could jump in, I know you said you're new.
Yeah.
Welcome. I didn't get. I don't even know
Thank
who I'm
you.
talking to actually. What's your name?
My name is Andy. My name is Andy. I'm driving right now, so my video is not on. But
Oh no, it's all good, Andy. Well, welcome, man. This group is it's been growing, man. We have some extended members that's been on quite a while. We have a few that dibble and dabble, but it's great to see the community is growing. The whole effort, as I repeat from time to time when new people come on, is just to build accountability and ensure that we have a better sense of an investing mindset, as I call it, where you're talking about it, you're just hip to what's going on, and
yeah,
the more research and studying you do, the more confident you'll become with really understanding how to trade. So
that's
that's what this group is
exactly why
about.
I'm on here. And that's exactly why I just wanted to learn to feel comfortable knowing what I'm gonna do before I make my move. I've been like being pushed by friends and family for years. I have friends that are stockbrokers. I'm like, nope, I don't want to do it because I know once I get into it, I'm probably going to be stalking thing, and I don't want to live my life reading the stock market every day. So I was like, I said, now everybody's like, the market is very aggressive now, and everybody's like, buy at least some Doji coin or something. It's about to blow, and I'm like, okay, let me see. I might. And then this group stumbled onto me, so I was like, okay. I said maybe the earth is telling, the world is telling me something right now. So let me see what's going on, and
Let's do it.
let me
Who
let me
who
get my
referred you by the
download.
way? And I'm sorry, I didn't
Oh,
mean to interrupt.
Katiana, Katiana.
Oh, oh, Katiana, how you doing? Welcome, Katiana.
Hello, how are you?
How you doing? We like
I'm
to
doing
put
well,
people on
thank you.
blast when they're just jumping in. Katia, so give us the what they call it, the olive tree branch. Who's the connector? Is it you or is it Andrew? Who?
Actually, it's Vanessa.
Yes.
Yeah, because I met up with her and my cousin Farah. So
Oh
they told yeah,
yes.
so she told me about it. So I'm
I
really
know Farah.
interested.
She used to work at the NFL with Vanessa.
Yes,
Yeah.
yes. So because of her, I definitely the reason why I actually joined the group is to learn a lot more and to have a better understanding as well.
Good stuff. Good stuff. Well, we got a cheat sheet situation going on with
Mhm.
algorithm that Will, who was just speaking, has one of his financial partners brought it to his attention, and he's jumped on board with it, and he's been so kind to share that with the group. Is something that he pays for, so we're excited to have that because essentially what Andrew was talking about, we as a whole, we want to get on a sense of long-term investing. That's really what the stock market is about, is
Yeah.
great companies. And this algorithm shows you how to create stop losses, and really it's following the market, right? It's machines and artificial intelligence that's doing the math and the computing for you. So you can essentially follow the track of those companies, still do your due diligence, but following those track with those companies is going to give you a better sense of really how to create stop losses and really what's your strategy on growth of stocks. So,
Absolutely.
for example, he posted Moderna was on that list, and it was a buy entry point of I think 130 um, on April 1st, and now it's at 175. So he's gonna flat. Will, when I pass it over to Will, he's gonna show this chart, and then we're just gonna break it down because it's a great way for us to really look at like 5 stocks that are major stocks in terms of cost and price, but they're also the percentage that you can get from them from a long-term perspective is pretty much locked in with this algorithm. So
Okay.
Will is there, and Will is
Yeah.
sharing his screen now. So we're gonna jump right into that. And I'm trying to be discreet. We generally go around the room and welcome, but because we got 2 new people, we're gonna start it off hot. So I hope everybody is well. Vicky, Natasha, Will, and
Hey everybody, welcome. I'm doing
Yes.
good.
I don't want to be rude.
All right. So I'm for the new people, I'm gonna just backtrack a little bit. So this algorithm tracks Nasdaq 100. Mostly tech companies and stuff like that. They'll have like Moderna and stuff in there, but they track the 5 top movers in that index. And it comes out every month. We'll get a list of names, 5 names to be in, and you split it up. You split your portfolio up, however much money you want to use for the algorithm, 20%. So 20% for each one of these names, and you buy your position in it. So let me see if I can mark this. No, I don't know how to mark it. But if you look at one of the columns that says the entry price, that's what price at the 1st of April 1st. That's what it opened up at. That's what we bought it at. The last price has been traded at our current stop. So it's kind of risk management. Just in case something happens with the market and it drops, that's the price you're getting out at. And then we have the next target, which is where you're gonna sell 20% of your position. So you bought 20% of that position. Say it's $500 or $1,000. $1,000 on AMAT. So once it hits 165, you're gonna sell 20% of that $1,000, which would be what, $200 around.
Is that automatic? Does it do it automatic, or you have to do it?
No. You have to do it on your own. You could set up triggers.
Yeah, like just like the one.
So you don't have to watch it.
Okay.
Yeah, once you get on the platform, we could Raul could show you the triggers. But first you got to get on the platform, and then you'll see that you could put up like stop losses and stuff like that. So once it hits 165, then the current stop will bump up. It will bump up to what it bumps up to. Okay, it bumps up to your entry price. So once it hits its first target, it's gonna bump up to its entry price. If you look down at Moderna, it hit. Let me pull up the next one. Yeah, Moderna, see, we only have 50% of the position because it hit its target 2 times last month. You see the entry price was 132, last price was 178, current stop is 158 because it hit 2 stops already. So the current stop price is higher than the entry point. So either way, if you was in it at April 1st, you're gonna walk away with more money in Moderna than you put in. The reason why I brought it up, this month there was no changes, nothing got stopped out. Sometimes you'll get stopped out and you'll take all your money and just hold it for the next position. Nothing got stopped out. There's nothing new for May, but there are some things that you can get into and have less risk because it's lower than the entry price, such as MU. MU last price is $86. They entered at 93. So you could buy it at 86 right now and put this stop price at 79. And if you gain more, because you'll gain. If you lose, you won't lose as much as the people who's been in it since April 1st. So that's one. There was another one.
Well, could I just jump in on MU? So Micron Technology, that is a stock that I've been following for quite some time. They make computer chips. In the tech world, Intel, Microsoft, it's a heavy player, and this would be something that I think progressively you can look at of long-term investing. So even on their 5-year chart, they have they was trading at $13 5 years ago, and they've been progressively going up. So when you're looking at these stocks overall, I just want to make the point to still do your research and see what's your whole portfolio, how many tech companies you have, and see what's the best. But as I mentioned in the beginning, this is a perfect kind of shadowing process if you're new to this trading game with quality stocks that you already have the entry point and the stop loss and everything baked into this algorithm. So as I said, it's really a cheat sheet. So I just wanted to jump in there for particularly around Micron Technology, because it's a company that I'm very familiar with, that I've traded 2 or 3 times.
I don't want to. I said a lot, so I wanted some questions. If you guys had questions, there's a lot of numbers. Like I said, sometimes stocks can be a lot of numbers. So, you guys have any questions? Anybody?
How do I get my hands on that cheat sheet?
What was that?
How do I get that cheat sheet?
Cheat sheet, I'll post it in a group chat at the beginning of every month. I already posted this. This is already there. I posted it yesterday, I think, when I got it.
Okay.
So this is there. You could just look up the tickers, and like I said, last price, entry price. If the last price is lower than the entry price, you could get in it, and it'll be less of a risk than you getting in it for one. Moderna, I mean, Terrell could tell you about Moderna. Moderna, over the last year, it's gone crazy. It's a good long-term thing. This algorithm is really about swing trading. So you'll be in any of these plays for a few months max, and then you'll jump out. So this is really about like swing trading, long-term stuff. There's a lot of these companies could be long-term if you would like them to be. You just do your own research and figure them out. They could all be long-term, because this is a tracking NASDAQ 100. So these are solid companies.
And what I would also add to that is some of the technology that algorithms use is the same thing that they use for mutual funds and pulling together specific stocks that follow the market, and they play against what they call cycles of investing. So tech has pretty been strong over the last course, and it's still going to be a strong anchor for most portfolios. But when you look at these algorithms that can do the computing that you can't, and really understand what it's like to know what's your entry point and when you should get out, that's really the cheat sheet. And that's the process of kind of matching that with what your goals are for investing.
You guys got any other questions?
Let me ask, are any of you familiar with any of these stocks besides Moderna? Because Moderna is pretty much as it relates to COVID, is one of the most popular drug companies stocks out there.
So why isn't Johnson & Johnson or Pfizer? Why is Moderna more? Is it because of Bill Gates only, or?
Why? Well, you know, offhand, I kind of got a little bit of.
I mean, there's all.
I'm sorry.
I'm sorry, I couldn't hear you.
I said, you're saying Moderna is doing good. Is Pfizer and Johnson & Johnson doing well as well?
Yeah. Actually, one of my lead investors, those were the 3 big companies that he's invested in. Pfizer, Moderna, but it's all long term. I mean, Pfizer is such a market; it's a big market share, market capitalization, that is, in terms of what they have in shares available. So it hasn't moved. It hasn't had the growth like Moderna. Moderna was pretty much new to the scene and captured all of the speculation around creating the vaccine for COVID. So they had so much growth. If you look at the comparison, Moderna versus Johnson & Johnson, and you can do the math offline, look at that. Just look at the year of what Johnson & Johnson and Pfizer has done versus Moderna.
Yeah, Moderna also, Johnson Johnson and Pfizer created the COVID vaccine for not for profit. So Johnson Johnson and Pfizer just did it just because of humanity. Moderna is getting paid and making profit off of the COVID vaccine from the governments. So like the governments are paying obviously Johnson and Johnson and Pfizer, but it's just covering their costs. It's not for profit. Moderna is actually making profit off of it. From what I understand from the last year of listening in to the details, Moderna didn't do this just because. They probably couldn't because Pfizer and Johnson Johnson's older companies established and they could just take the hit. They don't have to make a profit on everything that they make. Moderna's new to the scene, like Rel said, so that's possibly a reason why they're doing better than the other two, because the other two haven't grown, but they also pay out dividend, which Moderna doesn't do. So that's kind of how they offset.
Who gives out dividends? Pfizer?
Pfizer and Johnson & Johnson.
Oh, they both do? Oh.
Yeah.
How much is one a share for them?
I'm not sure off the top of my head. I think Pfizer's always hover around $30-$40. Johnson & Johnson's about $116 a share.
Yeah, Pfizer's 38.68 right now. And its high point back in November was 41.
Oh, wow.
And you'll find that the case for, stocks that pay out dividends. They're not moving a lot, but you're holding them as anchors in your portfolio.
Yeah, I definitely want some stock that gives out dividends. Nobody don't want to just keep stuff holding in there without making a check somewhere.
Exactly. So we got another newcomer, and I'm gonna call you out, my cousin Abon. Me and Abon's the same age, grew up. He moved to Cali on us, and he actually just started an online trading academy. So that's it. I don't know if any of you have heard of it, but it's a big juggernaut in the trading academy space. They charge a grip for training, but they get somebody to coach you. And it's really, they teach you day trading, they teach you futures, they teach you a lot of the alternative ways to invest in the stock market. So Abon, I know you said you got the young ones in the back and you're going to be on mute, but I just wanted you to introduce yourself to the group and say a little bit of something.
Yeah, thanks, Will. Yeah. Like I said, I got a lot of background noise while I had everyone on mute, as you can hear now. But yeah, I did have that. I had a 3-day online. It was a 3-day course going over different things that the online trading academy offers. I mean, the biggest, as far as value proposition I see with them is that they offer, the hands-on one-on-one coaching, having someone you can go on site, someone can really be over your shoulder helping you with your trade. They can look at your trade logs to see if you're not performing, what things you can potentially change. It's like really hands-on. They have a big community of former students and some of their top traders where they meet and talk. They actually walk you through their trade prior to set up, why they made those trades, give you like a good description of what they did and why they did it. So, but like Will said, the price is really high. So it's still something I'm thinking about, but I definitely see value in there as far as how they structure their courses, the coaching that's available. It's a lifetime thing, so you can retake a course. They have all the different assets. So you have, Forex, you have the futures, you have the stocks, you have everything there. So you can focus on one particular asset, drill down in that. They can coach you through that. They have a very good training platform that they developed in-house. And it actually will it will tell you if you're making a good trade or not. A lot of platforms won't tell you if the trade is good or not. This one will actually rate the trade, give you a score. So it's a lot of good things. I definitely think it's worth checking out. The price tag, I think for their core training plus one asset was like $17,000. You could do one core training plus 2 assets and stuff like that. The good thing is that they don't really focus on you jumping out there and trading immediately. They have you go through like a rigorous course, all simulated, and then as you start winning, doing it a couple of times, then they kind of introduce you to actually using your own money. So it's not a real emphasis on getting you out there. It's more of making you a better trader. Let me put you on
Good
mute
stuff.
though. It's
Good
getting hectic
stuff.
over here.
Yeah, thanks, Abon. Good stuff, man. Yeah, I think and I just wanted to Abon to introduce himself, but that online, if you have touched any brokerage platform, you will have had some type of advertisement from the Online Trading Academy. So if you look in your emails or anything, you would have seen something on it. But it's an intensive platform, and I know he just got on that, so I wanted him to share that. But back to regular scheduled programming. Will was asking about any questions on the algorithm.
Vicky, Natasha, you guys are long-time members. Have you guys jumped on any of the algorithm plays?
I haven't yet.
I haven't. Oh, sorry.
Okay.
Go ahead, whoever was speaking.
I think it was Vicky.
Yeah, I'm sorry for
You
interrupting.
guys know the other ones? Let me pull it back up. You guys know what the other companies do?
Which, oh, yeah.
No, I don't.
I think we talked about this the 5G. Yeah, y'all heard about the 5G movement and stuff like that.
Yeah.
The rest of these companies are all chip makers. So they make chips for computers, not just computers, but cars, the EV cars. All these companies put chips in those cars and put chips in your cell phone, stuff like that. So, and that's one of the hottest sectors for the last year and a half now.
Hi.
You see the numbers on those
How you
things.
doing?
So I think I think if you guys don't have any questions, again,
Yeah.
I think this is a great asset for us. Andrew, I know you said you was driving, so definitely check out, if you're on the WhatsApp, check out that cheat sheet and do some due diligence on the stocks that are listed. The 5 stocks are Micron Technology, Moderna, Applied
Materials.
Applied Materials, Lamb Research Corporation is one. The ticker is LRCX. And the last one is CLAC, KLAC. I'm not sure what that, let me look it up really quickly while I'm talking. That is a semiconductor company, KLA Corporation. So yeah, all great, solid technology companies. I think that's a great thing for us to look at. If you don't have any technology companies, you might want to consider logging on to one of those and checking them out, even if it's a portion of your portfolio. So Will, I just wanted to know if you could bring up Plug for a second. You have it, or you want me to do it? Do you have a because I know it's
No, I could pull it up.
yeah,
Hold
if you
on.
can pull up Plug for a second. Or you know what might be better, Will? Bring up the Applied Sciences. Bring up one of those 5 stocks. Let's not jump to a different stock. Let's jump to stocks. Any one of those 5 stocks. Micron, Applied Materials, rather. And what I want to jump in and let you guys get a sense of looking at and I'd advise you guys to do this for stocks, particularly stocks that's just hovering in your portfolio, or stocks that you may have brought from a tip from somebody. Use this opportunity to dive deep on it if you're in front of your computer. Like Dawn, you said you invested in Marriott a long time ago, but this is a great opportunity to kind of just check out the pattern of a stock.
Okay.
Yeah,
Thank you.
If you just pulled up Marriott, for example, not you, Will, Dawn, because I know you own that. If you have the, and you just look at the 5-year chart.
Okay. I'm looking now.
And what you want to see is, Will, you still pulling it up?
Yeah.
What you want to see. So I'll continue on while you're doing that. So Marriott has been progressively going up over 5 years.
Right.
It went from $66 to 152, and then it got caught by the by COVID, where the whole market dipped.
What the hell? Why is it not coming up?
But I wanted to show you guys kind of pattern trading within your own stocks that you have. So if you look at, I'm waiting for Will to bring it. I can try and bring it up as well.
Yeah, go ahead. Try to bring it up because it's not
All right,
popping.
just hold on for 1 second. Okay. All right, can y'all see the Marriott screen?
Yep.
Yeah.
Yes.
So you see over the 5 years, and this is how you kind of cheat when it comes to looking at the pattern of a stock. So this imaginary, so look at right here 5 years ago when it was 67. That was the lowest it was 5 years ago. And if you fast forward to its next major dip, it was 102 3 years ago. And then this dip was 121 2 years ago. And then, it started to rise. And of course, with COVID, it's slapped all the way down. So now COVID is such an anomaly, but everyone in hindsight 2020 they know what to do now when there's major turns in the market and you're protected where you're not taking those losses like everyone else and you have cash. You could jump in some of these easy opportunities. But what I want to show you guys is that, so if you go from 67, there are things that I've been really trying to get people hipped on to support lines and resistance lines. That's the line that goes from 67 to 102 to 126. So if you could flash back to your geometry days where you were doing slopes, not to get too technical, but you can kind of see the pattern. And these are the type of stocks you want to go in. If you're looking across the 5 years, if you get a referral of a stock, look at the history of the stock, see if it's a growth stock, see if it's progressively going up over the 5 years, and really, really track it. And this is kind of like, without all of the models and technicals, you can look at this stock and you can kind of see the health of this stock. So right now it's at 148. Its highest point before COVID was 152. So, stocks is interesting when you're looking at the health of a company, but when you're trying to figure out how to invest in a stock just from looking at the pattern of it's been trading, you can, this is like a pretty standard growth when you look at it investing in stock. And this is how you want to invest. And this is why I say, back to that algorithm, it really, really, it cheats for you because it gives you these entry stock points, when to sell and when to buy. So I was trying to have Will pull up another stock. Let's look at Micron.
So
Look
Terrell, I have a
at
question.
Pfizer. Look at Pfizer. I'm sorry, just real quick. Just look at Pfizer so you can see the comparison between growth and.
Well, let me pause because I think Dawn had a question on. Did you have a question on
Yeah,
Marriott?
I have a question. So I'm a little confused. So the resistance and looking at the up and down, I feel like COVID kind of messed us up. But are you saying that we should try to look at a certain level to figure out when to purchase? I'm confused as to what you were trying to say. I'm sorry. I wasn't
So
tracking.
one thing, and this happened like a month before you got on. One of the vocabulary words that we sent out was support line and resistance line. So
Okay,
it would be helpful to kind of just like get that definition locked in, because you'll understand what the support of a stock is and what
okay,
the resistance is, and that helps you to kind of identify what's your entry point in stocks. And stocks that you
okay,
have, it helps you to identify whether you should sell it. If you make that mark on that resistance and the support line, whether you can sell or not. It's a little technical, and I want to get some simulation. What I'm gonna work on is something that can simulate it, or a video that I can show that really speaks to and gives you the visual aids of what I'm talking about. So I want to just harp on that, because I think it's something that I've used over the years. And when I got hit to it, I was like, oh, okay. I'm pretty confident now in when I'm investing in a stock to look at these patterns and really be like, oh, I can confidently invest in this stock and be
at this
okay.
point, I
Yeah.
see. So it gives you the point when you can invest or sell.
Yes.
Those two,
Yes.
okay, got you.
So and it's right correlated to the algorithm, because the algorithm is doing that math for you. But it's
Understood.
great when you can see the graph and do it yourself and leverage something like the algorithm, because now you're honing a skill and you have kind of like a spreadsheet to help you checks and balances against the skill set that you're trying to really form, and that's trading within that trading channel, that support and resistance of every stock.
Thank you. I think I cut off Will, but thank you so much for stopping for me. Go ahead, Will. I'm sorry.
Will, what you was asking about? You said go to Pfizer.
Yeah, just to show the difference between something that's growth versus like just straight dividend.
Got it. And just to be clear, Andrew, I know you said you was driving, so we're pulling up some things to look. I want to make sure you're not trying to
You
look
know,
on your
when I
phone.
get to the stoplight, I'll be looking.
Oh man, Andrew, don't have us have a tragedy within the. I ain't even gonna put that out there, man. Just be safe.
No,
Right?
no, I'm safe. I'm safe.
All right. So this is 5 years on Pfizer, and again, this is, you can still like there's stocks that I've held, and Inovio Pharmaceuticals was one of them that I've held until it's reached a certain peak, and it's volatile enough where it dips, and you can still trade within kind of like that top. So back in 2018, Pfizer hit $43.80, and then its lowest point, which was following COVID, was $27. So, if Pfizer reaches anything below 30, it's a good buy, just based on the pattern of how it's been trading over the 5 years. And it would be something that if you're not holding it for the sake of dividends, you can buy it and trade it when it gets to 40. That's 30% on your money if you're buying it around 30 or 32. So I think this is something that's dividend stocks are pretty flat in terms of their growth. In most cases, they've reached such a capacity where they can share their revenue with their shareholders. That's what dividends are. But for the most part, it still gives you the framework within to trade. Right now it's at its highest point that it's been since December, and that was only $3 more than what it is. So it's good to kind of just, with stocks like this, you're not looking for expansive growth, but when there's dips in Pfizer, like, so if you're looking at Pfizer down the road and it gets to $30, that's a good buy point, because that's where the majority of these mutual funds and hedge funds have, that's what creates the support for stocks. These banks and major institutions that have it at a certain price.
The reason why I told them to bring it up too is because I know a lot of people in the group prior to this thought, Moderna jumped as soon as they announced the vaccine, so Pfizer is going to do the same. So I just wanted to make sure you realize that sometimes certain stocks, even if they have great news in the market, they may not never move, because that's just typical of how they trade.
Yeah.
They don't trade even if they have positive news in the market. So You just gotta know the stock. Like what Rel's saying, look at that 5-year chart, and that 5-year chart will really tell you what that company's about. If they're like a dividend stock or something like that, if they just trade flat normally.
Got it. All right, so we've been talking for a bit. Before we go on, I want to see if anybody has any questions. Just overall, we only had a couple of things on the agenda. I wanted to have a more open discussion and see what's on the minds of everybody. As I tell everyone, trading, if it's like a hobby to you, then it's something that you get excited about when your stocks is doing well and when the market is doing well. But I think overall, you want to get into the sense where you can put your portfolio on autopilot and really, really, take pride in the sense that you own stocks that you're proud of owning. It reflects, who you are and what you want to own, but also you're learning from that process of investing. So I'll open it up.
I have a question.
Go ahead.
Well, I have more of a statement. So have you guys heard about a possible split with Amazon, stock split with Amazon?
I heard some buzzings. I don't know how how real that is now. They I don't know if they need to raise money. That's an interesting opportunity. I heard some buzzings, but I don't know if they need to raise money. Generally, stocks, they do splits when they, for particular, to raise more money and to get within a price point of more investors.
Exactly.
Right
So
now,
that's what I heard. So I wasn't sure. Huh?
So if they split, it would open up to more investors. So,
Yes, I heard it's supposed to split to like 4.
Wow.
But it's rumor right now, but I want to know if you guys heard about it.
I haven't. I'm gonna do some more research. And I tell people all the time, like you and Andrew, you mentioned it. If you want to get in and not look at your stocks all the time, I mean, if your portfolio is $6,000 and you have a bunch of different stocks, you could cash in and buy 2 shares of Amazon and watch the growth. Amazon is not going anywhere. It's just they're just a juggernaut. It's just
part of our life now.
Yeah, it's like, and they've capitalized. So it's one of those things where you're talking about getting in now, and 5 years down the road, Amazon is going to be trading, if they don't split, that $3,000 is going to be, $5,000, $6,000. Definitely, it's going to double its growth. They just can't lose. And in one business model, Amazon Cloud, the cloud sharing, the money that they make from cloud services is obscene. It's that it's starting to trump their money they make from selling products. So the business model is just growing crazy. But I'll pause there also. I'd like to ask Katiana, I'd like to ask new folks, what's in your portfolio? Anything you want us to do research on or share before we get into ETFs? I want to pull up a few of these stocks that you have to kind of force you to look at it from a long-term perspective and try to engage kind of an overall perspective of the stocks in your portfolio. Any stocks you could share with us?
Okay, so when I started, I actually just added money towards I have Moderna, Pfizer, Bitcoin, and but not a large share in Bitcoin, because at the moment I wanted to kick myself, because when Bitcoin first came up to me, instead of getting a share, I got way less than that because I wasn't sure how to do things. I just pretty much bought a couple of things and just to see. But
how long ago was that, Katiana?
That was before, huh?
I'm pronouncing your name correctly?
Yes, Katiana.
Yeah, how long ago was that?
That was it last year or the year before? Yeah, but then I couldn't. So basically, I have a couple of stocks and I wanted to sit down and be able to read it and what I'm doing. Let me see because I do have Robinhood. I have Stash and Acorn. So I pretty much added different
So
things
what is the
there.
stock that you need to do some research on? So
Let me see what I have. Well, for Moderna, it's pretty much out there. I try to get something that I'm either using or things that I'm familiar with.
got it.
And what I was trying to do was have an idea of basically what the future holds. Of course, you're thinking about the microchips. Of course, that's not going to go anywhere. We're just developing more, with the computers and everything else. Sorry, I'm just touching other things too. So I'm just trying to figure out what kind of what can happen. Of course, everyone's getting the vaccine. I'm trying to figure out possible outcomes of things that can happen in the future, and what kind of stock can I put into what I can put my money into that, not to say maybe natural disasters, anything that can happen. I'm just trying to figure out possible outcomes.
So 3 things that we spoke of around November is things that are relative to what's going on. So telecommunications companies, of course, a lot of the world is needing more broadband now with everyone working from home and telecommuting going up. So that's an industry that's definitely going to have a growth. I think collectively we have to challenge ourselves to see what are some of those top companies in this sector. You have Verizon and all the major players. But I think it's something that to your point is what the future is going to hold for growth. Same thing for 5G, same thing for cybersecurity. So I wanted to, start thinking, because that's one of the things that we mentioned, like if you really look at investing, it becomes easy if you're looking into the future like that. And you're doing your due diligence on these companies and you know how to kind of assess the technicals, but you're doing your due diligence on what the future holds with some of these companies. Like when people saw that during COVID, people couldn't shop and everyone was doing the same thing, hooking up their backyards, Wayfair was an easy target. Wayfair and Overstock.
Yes, it was.
$1.70 in January of last year, all the way up to $100. I think now it's like $75, but you're talking about 7,000% on your money. Wayfair did about I think it went from $22 when COVID hit to around 300 and change. It's probably a little over 300 now, so that's 15, 16 times your money. But I think to your point, and I actually wanted to see if there's any stocks that you particularly had that I can pull up. But
yeah, I was trying to look. I might have to get back to you on that.
That's the way you really invest. The distracting part is when you have these companies that, like, I told Will about a company that one of my investor friends told me about. And it's a penny stock. I'm gonna pull it up now.
Okay.
So it's
done,
SPAC.
it's done well this week too.
So Soaring Eagle Acquisition, it's a SPAC. And I'm gonna dive in right now because they have 3 different tickers: SRNG regular, SRNGW, and SRNGU. So it's 3 different businesses coming together.
Okay.
And my friend told me about this, the SRNW, when it was $2. And I mean, stocks, I don't really get too excited about penny stocks because it's just like cryptocurrency. It has the ability to be super volatile. So if you want to, jump in like from a Vegas perspective and put a whole bunch of money on it, you can do that. But SPACs are different because SPACs are companies that are designed to pull businesses together. They're acquisition companies. Okay. So they have the ability to have certain growth in a short amount of time. And the people that put this together was the team behind DraftKings. So they have some kind of background in putting together successful platforms or successful businesses. But I just wanted to put this on people's radar because I didn't go in yet. I told Will about it, but I wanted to start assessing it from, is this going to be something that is long term? So at the end of the year, can this stock be $15? If so, how much would I would invest? My minimum is really $1,000 on a stock that I get a tip from, and I'm looking to hold it, so I'm not worried about the volatility. If it's a strong tip and I like the technicals of the company, like the financials and all that, and seeing the growth of the company, then I'll probably go in a little heavier. But that's generally the way I approach tip stocks. So if there's nothing else on any other stocks that folks want to go over, I wanted to talk about ETFs, because I think now that the market is in a very interesting place, it's good to start looking at ETFs and pulling over some of, if you have a lot of money in just random stocks, pulling it into ETFs. Natasha, I know you have quite a few ETFs and some good ones, but I wanted to talk about the top ETFs. There are cryptocurrency ETFs coming out, and there's really ETFs in almost every sector. Social media strategies is the ETF called Social, SOCL, and it has Twitter and all of those things. But the reason I wanted to talk about ETFs, because it's a great way to put your portfolio on autopilot, especially in times like this when there's a little bit of angst in the market. We got stimulus money out there. We got, there's a lot of things that's holding. You have a lot of stocks that are overvalued too. The jump that happened in 2020 was, quite frankly, insane with a lot of these stocks. And I think it was a fair factor, of course, that drove the market all the way to the level it was. But you just want to make sure that you're protected. You have your trailing stops on stocks that you've gained some money on, and you start looking at some of the ETFs. Now, some of the ones that we talked about in the past, we talked about all of the big kind of stocks that follow the S&P 500. There's SPY, of course, and that's pretty heavy right now. That's $400, but it follows all of the top stocks. So it would act like a mutual fund. If you bought into it now, it would essentially, if you look at it over the 5 years, this is what it's done over the 5 years. So just like Marriott, I showed you stocks like this. When you see these dips, you'll be able to be a much better investor now when you look at stocks like this. So if it fall, you're not going to panic like everybody else. You're going to see this dip point and you're going to be like, okay, I'm jumping into SPY and I'm just going to ride it and use that as, anchor for my portfolio and not worry about it and buy a share, every time I get enough to buy a share. So this is an ETF that's just, it follows the top 500 companies. So it has Tesla and Google and Netflix and Amazon, all the top companies it has. So you want to make sure that you have your portions, whether it's 10%, 20% of your portfolio in these top ETFs. And then as things change and whether you want to put your portfolio on autopilot or you want to be less of a money manager, you can put more money or use your savings account, the cash that you have in your account, to put into some of these ETFs. So this is one, a cheaper one is PPLC. This is $44. You look at the 5-year growth.
Terrell, what do you think? Because I have QQQ. What do you think about
QQQ? Is the same deal. It's just like SPY. It has it's following those top stocks.
Exactly.
So, yeah, so it's the same deal. It's a little less money.
Yeah.
Than SPY, but the growth is pretty impressive.
Yeah, you see how it's increasing.
It's just constantly going up. And even during COVID, so this is COVID, it didn't even jump down as much. So it actually has a better chart than SPY.
What about VOO? VOO?
Same deal. VOO is another one. Let's look at the chart. But these are the ETFs that really you can use as a savings account. You know, you really can.
Yeah,
Buy stocks as soon as you hold on to them.
I have
This
that.
has
Yeah.
a pretty interesting chart. It's just like QQQ. It's has a little less growth. It had a bigger dip during COVID. When that dip, it had that's about a 20% dip, but it bounced right back. So, and now it's at its all-time high. So the reason why I wanted to focus on ETFs is because there are a lot out there, but it's really about your tolerance and what you have in your portfolio. So if you want to be invested in marijuana stocks and you don't want to ride the wave of volatility, you know, there's an MJ ETF that is really good for marijuana stocks. It has a lot of the top marijuana stocks in it. So this is a very good ETF. And you know,
YOLO is better. Look up YOLO.
Oh yeah, YOLO is a good one too. YOLO is a very good ETF. So it's pretty new. I think YOLO is 2 years old. So it came out in May, right after the hump. It did a little dip, but you know, it's at $21 now. And the whole market, so just so you understand where the marijuana market is, marijuana, most of the companies are still fighting for policy so that they can get bank funding. A lot of marijuana companies, because it's not legal across the board, they can't secure real bank and financial loans. So they're using, you know, the stocks to raise money. And a lot of the bigger companies, the Johnson & Johnsons of the world, they're figuring out how are they going to capitalize on this marijuana market. So, you know, there's a whole bunch of mergers in the future of marijuana companies, but you can look at this as a way to anchor your entire portfolio. So I'll pause there. We have 6 minutes left. I want to open it up to see if anybody have any questions or any stocks you want to research. I want folks to use this time while we're all together to dive into your portfolio and really look at some of these, you know, look at some of this data. And if you have questions about how to research it, let's do it now while we're all on the call.
Have we researched NEO, NIO?
Yeah, we've talked about NEO from time to time. I could pull it up.
What do you use to research stocks?
It depends. So we use, I show people and this is more of what analysts say. So you can follow the analysts and do your due diligence. I use Seeking Alpha when I'm reading articles, but for the most part, I'm looking at Yahoo Finance and I'm looking at the statistics of a stock. So I click on statistics, I scroll down, I'm looking at this 200-day moving average. I'm looking at the 50-day moving average. You know, the 200-day moving average is higher than the 50-day moving average. So that means this stock is trending down. Right now, it could be having a comeback, but it's in an interesting space because it's been trailing Tesla, so to speak. This is the Asian version of Tesla, but they are they're in a space now where they had a sizable amount of growth. And now it's about what is, if speculation is going to drive the stock, or, you know, the numbers I'm looking at really generally is the revenue, you know, how are they making money? I go as deep when it's a stock that I really don't know about. I want to know who's the CEO. I want to know what's the background of that CEO. Like, I want to be able to really riddle off some information about that company when I'm investing in it. But it's Seeking Alpha for articles. I use tip ranks to figure out what the analysts are saying, whether it's a buy or sell, when I just want to jump in and I don't have time to do a lot of research. But Yahoo Finance is the core. You're looking at the statistics. This is the key factor, the moving average. You can tell if a stock is growth or my rule, I don't invest in stocks that are trending downward. I just don't.
What constitutes a trend? Would it be monthly or yearly?
Yearly, you can see, so if you look at the chart, you 52, the 52 weeks or the year rather is a good cycle to see what a chart is doing. But this is still considered a growth stock because a year ago it was trading at $3 and change. I heard about NEO when it was $3.50 from the manager of Commons Foundation, and from the source it was coming through a friend. So I was like, I started doing research on it. I'm like, okay, I love Tesla. I see what this company is doing. I've known in the history that there's been copycat situations that has just grown. So I told people earlier about the Asian version of Netflix. That's IQ is the stock ticker. That's the Asian version of Netflix. They did the same thing when Netflix was getting most of the speculation surge. They've been following that track, but they're still not on par with in terms of the growth of Netflix, just like NEO is with Tesla. But if this was trending down, so if NEO was like at 60 and it was now at 39, that would definitely not be a buy for me. If last year was at 60 and now it's trending down to 39, unless there's a major situation that, over the course of 5 years, it's been, that it something happened that brought it down to where it is now.
When I watch certain YouTubers that I like, they pull up where and I just never thought to look at it. I'll just look to ask you now, but like they pull up what the billionaires do. You want to be a billionaire, you think like a billionaire, and they see all the people who have bought into it over time. How do we get to that?
I posted a few websites that you can check out, and in TipRakes you can see too. You can see what the top money managers have in their account, and that is, I'm glad you brought that up. That's definitely going to be a topic for next week, because that is the illest cheat sheet when you think about it. You don't have to reinvent the wheel. You don't have to follow tips from people in your circle. Even you can follow tips from what these majors are doing, and there are a lot of stocks that there are a lot of websites, and I'll post them when we put them in the chat, that you can follow certain hedge fund managers or even big investors and just pick out the stocks that they're picking and do your due diligence, make sure it's aligned to your portfolio, but invest, use that as a guideline for investing. But so lastly, I wanted to bring up Twitter, because Twitter is a stock that I've been looking at, and I don't know why I just don't want to buy it. Like I've been looking at it. I've been waiting for it to, hit a certain surge. It was like $30 for 2 years, from, the middle of 2018 to the middle of 2020. It had a quite surge, and it was following a lot of the momentum in February when the market was just surging crazy. And then it dipped back to its normal price. So I'm asking, is Twitter right now a time to buy? So for me to buy Twitter, I would have to see where they are on par with Instagram and Snap and Facebook in terms of advertising, because they don't have the same algorithm. So they don't make as much revenue on advertising dollars as the other majors. But, I would look at Twitter as something long-term. It's Twitter. It's still a great form that most people use in their platform, in their book of social media platforms. So I'll pause there. Guys, it's 9:30. Unless you have any additional questions, I want to be respectful of everybody's time, and I hope you guys got a lot out of the algorithm. Definitely hop on that. I'm definitely buying some more Micron this week. That dip is quite interesting to me, and I'm gonna report on the growth of that. So I'm probably
MicroVision.
No, Micron Technology is a chip maker. It's on.
I think it's MU.
Thank you.
And I'm in applied materials long term since November. It was like $75 when I got it. It's like 130 now.
Wow. So So that's the cheat sheet for you folks. So
I have one more question, Rel. Like the growth stocks. When are you considering these stocks? I know speculative stocks obviously are stocks. Oh yeah, it's gonna go up, right? That's what I'm figuring at least. But what are the growth stocks? Like what constitutes that?
The biggest is that you're looking at that 3 to 5 year and you're seeing that growth pattern just constantly going up. And even when this dips, it bounced back crazy. But over the year is the 200-day moving average. That really gives you the check off of a growth stock. So if you look at this, the 200-day moving average was $100. The 50-day moving average was 130. And then if the current day is higher than the 50-day, you know this is a check off for a growth stock. If you can say those three things, that's one of the top bottom line bases to confirm whether it's a growth stock. And then you go to the chart and you look at the 5-year pattern, and it tells you it's like this stock is constantly going up. It had a little situation here where it jumped up, back in March of 2018, and then did a dip. Went from 50 and it, kind of cut itself in half, did the same, but now it's just, it's in a different trajectory.
So I know Microvision was all the wave last week, and I see that it dipped, and unfortunately I bought into it I didn't believe in the company, so I didn't buy the dip yet. But what would that be considered, speculative?
Yeah, Microvision is pretty new. I think I like this for a long term. I think it had some volatility, but it's been a very pumped stock too. I've noticed a lot of YouTubers talking about Microvision. I think the verdict is out on it to be profitable in the future. It definitely was short. Let's look at the short interest on Microvision. So the short interest is around 20%. That's still pretty high. Anything when a short interest gets to around 10%, it's a reasonable stock. But the short interest is pretty high now. So that's what happens to some of these hot stocks that are speculative. I still think it's a great long-term buy. I actually was mad that I didn't buy when it hit 10. I was meant to put an alert on it, and I forgot to put an alert on Microvision when it hit 10 the week of April 22nd. But I think this is a good dip. I'm actually watching to see what it's going to do this week. If it hits $12, I'm definitely buying, and I'm probably gonna buy as much as I can on Microvision and hold it for a year or two. I think it has a hell of a lot of growth in it. And even with that dip, you see the 200-day average is still on par with the 50-day average. It's still higher, well, a penny higher than the 50-day average. But that shows you that it's still in a comfortable spot. And before with NEO, that was reversed. So folks, thank you, man.
Okay.
Katiana, welcome. Yes. Andrew, appreciate you guys joining. Please feel free to text me. Let me know if you have any additional questions. I want to dive in deep and make sure you guys get as much as you can out of this group. But everybody have a safe week, and I will talk to you next week.
Yes,
all right,
thank you so much.
Bye, guys.
Take care.